Good morning. Welcome to Trading Hour. I am Reema Tendulkar with Mia Pavitra Parekh and Surbhi Upadhyay. Good morning, girls. Good morning. Just when I thought, 15 minutes back, the markets are attempting a little bit of a bounce, that bounce has been sold into. Look at that intraday chart. The Nifty is once again gravitated to the day's low, 17,075 points, 0.5% lower on the benchmark indices, and we're at the day's low, which pretty much coincides with, which is lower than the low that we had yesterday, and it coincides with the low that we had just about 45 minutes ago. Sectorally, the big fall is coming on the PSU banking index. The Nifty PSU banking index is down 2%, followed by IT index. IT index now has a decline of nearly 1.5%. Outside of that, your high beta names, the Adani Group stocks, which had seen a phenomenal rally over the last 2 weeks, is selling off, rapidly unwinding. Adani Enterprises, Adani Ports seeing big cuts in the IT pack. You've got Tech Mahindra, HCL Tech leading the fall. PSU banks, many in the broader markets, but even heavyweight State Bank of India is crumbling under pressure, and the mid-caps are underperforming yet again. The mid-cap index is down close to about 0.8%, and the advanced decline ratio, pull that graph up. You've got more than 2,000 stocks on the losing side. 1:3 is what the ratio is in terms of stocks which are gaining and the stocks which are losing in trade. The gap between the two is widening. So the first attempt that we had, Surbhi, to bounce back, that's been sold into.
And that's been the nature and the texture of this market for the last couple of days, isn't it, Reema? At some point, I guess it's going to turn, because we're seeing that in some of the Asian markets. For instance, the Hang Seng is off the lows. The dollar is off the lows, and there's some move back towards the 104 handle on the US dollar. Yields, which had tumbled big time, both the US 10-year and the 10-year, they're also trying to find some traction. So at some point, it's going to turn in India, but we're just not seeing that point yet. That seems to be the situation. That's the Hong Kong Hang Seng. It was down 2.5% at one point in time. So let's see if there's a reversal. Right now, no sign of that here in India. Just a word on the Bank Nifty, and that's been the problem index for this market for the last several sessions. The Bank Nifty has broken below the 200 DMA. And the question is now how much lower from here. I mean, we got a call in the morning saying another 2,000 points down from one of the technical analysts. So let's see how this plays out. But I think it's safe to say that till the selling stops in bank stocks, I think it's going to be difficult for the Nifty also, Pavitra, because there's no counter. Yeah. There is no money rushing to IT stocks, which is what was happening at the start of this year. Yeah. So minus the IT counterweight, and with so much selling in banks, who comes out in support? Reliance? Well, that's also not working. So at some point, the selling in banks has to come to some sort of a plateau, I think, for the market to stabilize and find its feet.
Yeah, oh, absolutely. And yesterday, the kind of fall that we saw in the US banks, I mean, you can imagine that this is playing out in the Indian banking index as well. The entire market move is something we were talking about ever since we saw the SGX, right? Where you expected that this is not going to hold. The exact same move that happened yesterday as well. For the banking, if you can just pull up a few of the smaller banks, you can see the kind of fall that's come through. Something like a Bank of India, you have Union Bank, Canara Bank, Bank of Maharashtra. These names will be up for you across the board selling scene, but these are some where you're seeing, heightened pressure. More from the financials, other than the banking names, you're also once again seeing pressure on Bajaj Finance and FinServ. So these ones up on your screen. The real estate pack also seeing some cuts today. It is one of the top losing indices in terms of sectoral indices. So there you have it on your screen, some cuts coming through. Reema was mentioning IT. Of course, Tech Mahindra correcting after the over 6% kind of move it saw yesterday, but a lot of the mid-cap IT names as well. So something like a Persistent is down over 2.5%. Emphasis, LTI, Mindtree also seeing cuts of over 2%. We'll actually talk more about this. Reema will fill us in with what's really going on over there. But that's what's happening with the market action right now. The big cue now to watch will be the US CPI data, which will come out today. So that is something that we are watching, and we will of course bring you up to speed with that when we do have it. But like we were telling you, over the weekend we saw two large US lenders, including the Silicon Valley Bank, which collapsed. Regulators, however, swiftly stepped in with emergency measures to contain the unprecedented situation. But the big question on everyone's mind is, will the developments in the US financial markets trigger a contagion? Closer to home as well, will we see a fallout from the SVB collapse? How will banks react? How will tech stocks react? So in the backdrop of all of these developments, will the RBI also pause on its tightening cycle? To answer all of these questions, we spoke with a host of leading market voices and economists on what they really make of the situation. So here are some of those comments for you.
Maybe becomes a little bigger in the US, but the Indian banking system is very different. But I would not think that beyond a point. Of course, it'll matter to Indian banking sector, just because if one sector does badly, somewhere there is some pressure. But broadly, I don't think any of that will we felt here beyond just the stock market impact for a few days.
I do believe there is more downside. There is some minor support around 17,100. But I think for a very long time, we have been working with a minimum target of about 16,800. So I think we are going to get there. Another big problem was that India corrected almost on a standalone basis till a month back. So we had our own issues to deal with. And now with what has happened globally around the SVB episode, things look quite ugly on the global markets as well, put together US and Europe. So things don't look good. I don't think this is going to resolve in a hurry. Expect a lot more weakness before things get better.
SVB is a case in point. I mean, we know that the whole VC landscape was all completely nonsensical. I mean, we've spoken about it, from the time the last crisis happened, the ultra low rates basically propelled money towards the riskiest part of the market, which is the VC market. And, that led to all kinds of unmerited businesses burgeoning, and people either giving equity or debt also burgeoned alongside. And SVB obviously, was the beneficiary of that boom, and suddenly we found that it wasn't so. I don't think this is a structural problem that it affects, banking in general in the US.
We're probably going to see the lagged impact of interest rate hikes, which happened around the world as well as in India in 2023. I mean, it'll manifest in probably certain idiosyncratic ways, like it has happened in the case of some of the problems that we've witnessed in the banking sector in the US of late, or probably in the form of actually a slowdown. I mean, consumption-led slowdown, both globally as well as we already essentially started to see signs of it in India in any case. So I think this will be the year of that, readjustment that we will probably go through. What was probably supposed to happen or was expected in 2022 might actually unfold in 2023.
Here is also an important comment by Neelkant Mishra of Credit Suisse. He says the severity of the contagion triggered by the run on US bank SVB and its closure last week will depend on regulatory decisions, like if the depositors will be made whole immediately. But were SVB's troubles idiosyncratic, which means basically an undiversified depositor base and no rate hedges, then should we fear more accidents? To which Neelkant believes we should fear more accidents.
And some more macro voices. Sonal Verma of Nomura says that RBI policy will pause in April, and this will be supported by coming disinflation. Sonal says that despite elevated headlines, softer super core momentum and below 5% inflation after April, as well as the US recession risks, support a pause by the RBI in April. She also says that the House is expecting headline inflation to fall to near 5.5% in March, with core inflation easing to 5.7% beyond March. They expect material inflation lower to below 5% in both headline and core inflation, with both likely to average 4.9% in FY24. Sonal Verma adds that favorable base effect will play some role, but we also expect continued moderation in the underlying momentum due to weaker growth.
Okay, let's talk about IT then. Now, the Nifty IT index is down close to about 1.5%. What is the big fear in the market? Well, US banks are under pressure. Some of the regional banks, 3 of them, have collapsed. So if the BFSI vertical comes under pressure for the Indian IT space, will growth rates moderate? Remember, the banking financial services contributes nearly a third of the overall IT services revenues. So if US BFSI comes under pressure, there could be implications for the Indian IT space. Well, most of the large Indian IT companies, the large cap names, do not have much exposure to the regional banks. Remember, the pressure right now is on regional banks. It's not on the large JP Morgan and Wells Fargo, which is where the larger cap Indian IT companies have an exposure to the top 200 banks. The pressure right now in the US is on the regional bank, to which what we've learned after speaking to many analysts is that some of the mid-cap IT companies have an exposure. Well, from my understanding, no mid-cap IT or large-cap IT company has an exposure to Signature or Silvergate. There is a very, very negligible, I think one analyst said it could be sub $1 million exposure to SVB. So let's count it as good as not. But there are some other banks, regional banks, to which mid-cap IT companies have an exposure. Coforge has an exposure to Fifth Third Bank, and Fifth Third Bank shares were down close to about 13.5% yesterday. Emphasis has an exposure to First Republic Bank, which was also down close to about 61%. So the fear is that if the contagion spreads to other regional banks, some of which I've just referred to, then there could be pressure on companies like Coforge, Persistent, Emphasis, and that is something that the street is going to watch. Well, that is the bear case scenario, right? That the things, there is a ripple effect and things spill over. But in the base case now, what IT analysts are telling me, that even if things, get limited to a couple of these banks, there is a possibility that banks are going to be more cautious, which means they are going to procrastinate on their IT spending decision given the capital constraints, because all of them are going to be sitting on some amount of losses on their bond portfolio. So the capital constraint is there for the US banking system, which means tech spends could come under scrutiny. Annual tech budgets could get postponed, delayed. There could be longer sales cycle. Maybe they're unwilling to spend on the ramp-ups of deals, which could impact the sector's near-term visibility. And that, according to many analysts I chatted with, could play out in the near term, even though a systemic risk which impacts the overall IT space could not, may not take place. But right now, the Indian IT space, particularly mid-cap names, as I spoke, Coforge, Persistent, Emphasis, these are the ones which are selling off quite rapidly. So just wanted to give you that update, get into a break. On the other side, we'll discuss commodities. Manisha Gupta joins me next.
Okay, still nursing about a 100-point drop on the Nifty. That's the market. Let's move on to some other stories that we have for you. The Bandhan Group is looking to enter the insurance business. Let's go across to Yash to get more details on this really interesting story. Yash, what are you picking up from your sources?
Well, Surbhi, you would remember and the viewers would remember that time and again we've got this intention from the insurance regulator of adding more and more companies in a sector which is already so crowded, but that has been the intention. And many reforms have taken place to facilitate the entry of insurance companies into the sector. What we've been given to understand is that one of those new companies could come from the Bandhan Group. Sources tell CNBC-TV18 that the Bandhan Group is exploring opportunities to enter the insurance market, and this includes both general and life insurance market. Though the first move is expected to come towards the general insurance market from the Bandhan Group, and then which will be followed by the life insurance market. Sources also tell us that officials from the Bandhan Group very recently met IRDAI, expressing their intention to enter the insurance market, understanding how the company is placed to make its foray into the space, and also here they've expressed the opportunity to look at both organic as well as inorganic growth. Inorganic growth, we've been given to understand that Bandhan Group is already in talks with many existing general insurance companies, exploring acquisition opportunities. As far as organic route is concerned, there is a draft which is in public consultation, which is expected to be approved, which reduces the minimum capital commitment to start an insurance company, and that could also help the Bandhan Group if they wish to take the organic route to enter the insurance market. But of course, Bandhan Group will be an important player if this foray becomes successful. CNBC-TV18 has written to the company on this particular query. A response is still awaited on this one.
Okay, thank you very much for that. That's an exclusive information for you. Let's talk commodities. Manisha is here with us. Manisha.
Thank you so much for that. Well, I'm looking at the crude oil prices where we are extended losses yet again. We saw 2% of a decline come in for the crude oil prices in the overnight market. The prices with this fall have now fallen by 4% on the week. On a monthly basis, we are down by nearly 6%. And for the year, we are now in the negative of 7%. Actually, when you look at this year, not a single month where you have seen the crude prices give you a positive return. So it has been a constant decline coming in for the prices. And at these current levels, below $80 per barrel for the Brent prices, we we are trading at around 3-month lows here. Well, there was support initially because of the weak US dollar and the Chinese demand recovery as well coming back. There are various reports suggesting that the Chinese demand in this year could be hitting all-time highs. But in middle of all of that, you have seen the US bank crisis, contagion concerns because of that, and fears of recession as well in US and Europe, and that's weighing onto the crude oil prices right now. There also is a report from EIA which says that the US shale output could rise to the highest since December 2019 in the month of April. So supplies clearly is not a concern, but demand is, and that's weighing on. The street now is waiting for the US inflation data that comes into the evening today. That would give you further direction for various asset classes, including crude.
All right, Manisha, thanks a lot for bringing us that update on crude prices, currently around $80 a barrel. But with that, we need to get into a short break. When we come back, we're going to speak with the management of Triveni Turbines to discuss how business is really shaping up for them. Hey guys, welcome back. You're still tuned into Trading Hour here on CNBC-TV18, and let's get you a corporate conversation now. Triveni Turbine is the first company on our radar today. It reported a strong set of third quarter earnings. Actually, the total orders during this quarter came in at over 400 crores, 420 crores to be precise. The margin was also quite steady compared to last year. So we now have the management joining us. Nikhil Sawhney is Vice Chairman as well as Managing Director at Triveni Turbine, and he joins us now to take some questions. Nikhil, thanks a lot for being with us today and taking out the time. This is Pavitra. If we can just begin by talking about your orders. Like I said, it looked quite strong in Q3, coming in over 400 crores. I think the total order book is around 1,200 crores. Please correct me if I'm wrong. But can you take us through what the execution timeline for this looks like?
Of course. Thank you, Pavitra. Thank you for having me on this morning, firstly. Triveni Turbine operates in the space of providing industrial heating and power solutions as well as renewable energy solutions. So I'm happy to give you visibility as to where we see orders. But very frankly, the orders are split between industry as well as renewable energy demand, both from India as well as our international order base. The execution cycle of our orders is typically between 9 to 10 months. And so it gives us ample visibility into the performance that we would have in the coming year. Given the fact that we're close to ending Q4, which is well on track in terms of what we had talked about in our earnings call, we think that we're in a good and steady footing. As you pointed out, our order booking is somewhere around the region of about 1,200 crores, which is a 26.5% increase over the same time last year. And so we anticipate this to further increase in the coming quarter. And so that provides us with reasonable visibility going forward into FY24.
You're saying the order booking run rate of 1,200 crores will sustain in Q4. Is that what the first 2 months tell you?
The order booking for the 9 months was 1,200 crores. The order booking for Q3 in itself was about 420 crores. Exactly. And so while it is capital goods is a lumpy business, what we can actually say is from a trend perspective that Q4 will be another very good quarter, both in all operating performances. That is on the top line, bottom line, as well as order booking.
Any indication of what Q4 could look like, Nikhil?
It's a little difficult to say right now. As you know, we'll be heading into our silence period very shortly. I think by mid-May, I'd be happy to come back and talk a little bit more about it.
Yeah, we wanted to get you talking before you enter into your silent period, so which is why we were trying to, quiz you, Nikhil. But we have seen a big pickup in power demand, and that's one of the segments that you cater to. Are you seeing that too on the ground, and how would you quantify?
Yes, very, very rightly so. Well, Triveni Turbine operates in the industrial space, as I said, and in the decentralized power generation marketplace. And if you look at it from an entire market, you have approximately 29% of the entire end energy demand, which comes from industrial heating and power requirements. As we see the energy transition of these companies moving away from a more carbon-intensive form into a more greener form of heat and power production, Triveni Turbine plays very adequately into that, as well as the fact that an increased amount of renewable energy demand from the world is coming in a decentralized form, both from biomass-based independent power production, as well as areas such as municipal solid waste incineration, as well as other waste heat recovery applications. And so when we look at it from an industry perspective, what we found in the last quarter was that our international inquiry book actually increased by about 55% on a year-on-year basis. while the domestic market, which had actually performed exceedingly well in the first 6 months on a year-on-year basis, declined. The inquiries declined by about 5%. We see that picking up again in Q4, and we see the international market equally contributing towards it. So we're seeing a broad range of contribution, not only from industries such as cement from waste heat recovery application, as well as distilleries in India, which are incredibly strong from an ordering perspective, but internationally, the energy transition and renewable energy power generation is really the market that we concentrate on, because that's what's giving us orders.
Okay, Nikhil, so that's a pretty optimistic sounding commentary. Can you distill this into some numbers, some sense of how the business will look in FY24? I mean, at a broad top-line level basis, what's the growth you're anticipating? And do you see margin expansion? If yes, how much?
Well, you know, I'd come onto your channel about a year ago and spoken to some colleagues of yours, including some of you on the call right now. And we talked about Triveni Turbine giving a guidance of a 35% CAGR growth in top line, bottom line for FY23 as well as FY24. And if you see our 9-month performance, we've already exceeded the entire year's performance in FY22. And so we think FY23 is going to exceed our expectations, and FY24 is on track.
So that's 25% top line and bottom line.
We said 35%, yes.
35%, okay. Sounds good, Nikhil. Thanks very much for giving us all the clarity there and reiterating that target as well. Really appreciate you joining us on the show today.
Thank you very much.
Okay.
All right, we'll take a quick break on that note. Come back with more on the markets in just...
Welcome back. Inching lower now towards 17,050. That takes the cut on the Nifty to triple digits. It's a 100-point knock on the Nifty, while the Sensex has extended its downfall today to 300 points plus. There is weakness, there is pain across the rest of the Asian markets too. Hang Seng down more than 2%, 2.2%. The Taiwanese markets hurtling towards a 1.5% fall. Vikas Khemani, founder of Carnelian Capital Advisors, is with us on the show now. Vikas, there is so much uncertainty, there is panic in the markets, there is pain, portfolios are getting hit. You know, what is your call? What should one do? Does this get a lot worse from here? And if yes, what is the reason for that?
I think clearly this is the impact of the sharp rise in the interest rates, and whenever this kind of sharp rise and with the liquidity withdrawal happens, the unintended consequences are always there on the system, and how it will come out and what shape it will come out always is unknown, and that's what has happened. I don't think anybody kind of thought that the smaller banks would be the starting point this time around. Larger banks were fairly well placed in terms of capital adequacy and all, but it is somewhere else. So always this kind of unintended consequences are coming from unseen and unknown factors. Fortunately, I think there has been a very quick response to contain the damage, and that's a good part. And I mean, we like to obviously see, because it's a very short time for such kind of problem to make any call. Good news is that Indian markets or Indian economy is relatively insulated from what's happening outside there. Our financial system is very solid. Our banking system is very solid. We do not have any major contagion impact possible on the economy. Of course, in a shorter term, the sentiments across the globe plays out, and that's where I think what we are seeing in the Indian equity markets also having an impact of that. So the way I see is that as it plays out, if I were to take, let's say, 3-6 months out, my sense is that inflation has peaked out, interest rates have peaked out, and you will start seeing some sort of comfort getting drawn on that. And Indian markets on most counts look reasonably well placed. So you will see incrementally money coming towards Indian markets. And once this panic subsides, I think markets will remain sort of get back to the normalcy. My sense is that it might be like this next couple of days, then till the time we get clarity. If there are more such failure possible, is this a larger scale? Right now, the worry is that there could be larger, more number of banks which could be impacted by that. What will the game plan? So I think it will take probably a week or 10 days to settle down more, is my sense. But we are also watching. It's a fairly evolving situation, so one can't say for sure this is how it's going to pan out. But only good news I can say is that Indian markets are on a very relative basis insulated from what's happening. Indian economies is relatively insulated from what's happening there.
Vikas, hi, good morning. So, are you beginning to nibble in? Is that what you're advising clients? Or are you saying stay on the sidelines, keep the powder dry and wait till it goes lower?
No, I think, look, again, I don't see a major catastrophic event, especially in an Indian markets perspective. And the fact that all the regulators are, agile and attending to the situation. So I don't see a major fall, and that makes it, interesting point from now to, next next 1 week, 2 weeks kind of situation. One should keep nibbling in for sure. Of course, one has to be mindful of the, in one thing, situations are evolving. So short term can be anywhere, one does not know. But medium term to long term, I know that this will be a great point of. Just go back last year exactly around, the markets in, were 16,800 points, and there was a gloom and suddenly markets recovered, right? So I think at one point in time, Indian markets become very attractive around 16,800, 17,000 levels. Indian markets become very attractive from a valuation standpoint of view. Money on the sideline comes in. So I think around these levels should be a good time to kind of nibble in. But should be spaced out.
All right, Vikas, thanks for joining us. This is Pavitra. You're saying that this might be a good time to nibble in. Would you also look at the banks right now, considering that they have corrected? It's down 8% for the year. Do you think that the banks is a good place to get into, or would you still show some kind of caution for that sector?
Yes, Pavitra, I think banks remains in a very solid position. Credit growth is growing. If you see last couple of 4 or 5 quarters, earning growth is very well placed. Current interest rate environment only helps them. So I think they are, in my opinion, well placed, and they would lead the recovery also. I believe as and when that once the dust settles down, panic settles down, they would be the ones which will be leading the recovery in the markets.
Okay. What about capital goods and industrials? That's a space I believe in the past you used to like. What are your thoughts on it now?
I do continue to like I said, that we are in the middle of a major investment cycle. That doesn't change because of this. The whole theme of China plus one, local investments, local manufacturing, from which the investment cycle do benefit, it does not change. It remains very, very intact. Whenever these kind of situations do arise, same companies which are kind of growing and will continue to grow are available at a good price. So definitely, these are the investment opportunities in those structurally positive sectors.
All right, Vikas, we'll leave it at that today. But thank you very much for joining us and taking us through your outlook. Some much needed optimism from you today, so that is helpful. But thanks for that. We do need to get into a short break on the show. But when we come back, we're going to speak with the management of Intellect Design Arena. So stay tuned for that.
Welcome back. We're sticking to more corporate conversations. And the next company on our radar is Intellect Design Arena. Now, Intellect has launched the world's largest open finance platform, emac.ai. This happened just yesterday. This cloud platform will help banks and other financial institutions design future-ready technology solutions. We have with us Intellect Design Chairman and MD Arun Jain to take some questions and help us understand what this really means for the business. Mr. Jain, thanks for joining in. Anything which is AI-related gets people to really sit up and take notice these days. So you tell us, what exactly, or rather, whom does this platform exactly target? And in terms of revenue potential, what are we looking at? How do you scale it up?
Yeah, so I think we call Bank Tech Wave 5. So in technology waves, almost from last 40 years, the technology has evolved Wave 1 to Wave 5. This is a Wave 5, which is design and experience wave. We are moving from product and processes, which bank enable using digital technologies, to open finance platform where bank can design their own experiences for the customer segments they are operating. So we call it a design and experience wave, which is similar to what iPhone did in 2008, where they converge 5 technologies together. They converge telephone technology, they converge telephone, camera, music, computer, and touchscreen technology. Similarly, emac.ai also converge 5 technologies to design the experience, which is about customer touch experience called events, equivalent to microprocessor, microservices, which is rich. Then it has got a AI, which is embedded to the operations, can reduce the operational cost for the bank by at least up to 20% by embedding the AI into operations. and then it's on clouds, and it is on APIs to integrate an ecosystem designed for the banks. So banks can design like an ecosystem. Yeah.
So,
Yeah, sure.
so Mr. Jain, that sounds very impressive. Absolutely, when 5 technologies being merged in. Very basic layman question. Are you the first mover with eMAC.ai, or are there other such offerings available in the market as well? I'm just trying to understand this from a business perspective, whether your banking clients have other choices or whether this will be a new proposition that Intellect alone is offering.
Yeah, so I think bank always wanted to design Mera Wala Blue, what Asian Paint. So they want to design their solution which are unique, but they didn't have a technology, because technology companies have designed around Wave 3 technology, which is product-based and process-based, not design-based and experience-based. So we are an early mover advantage in it. We invested close to 25,000 man-months effort in building this technology over the last 5 years, when cloud start having very early stage, AI is early stage, and all of them come together to create eMAC.ai. So definitely we have early mover advantage. There are similar companies in this space called Thought Machine in US, which is having a partial core banking product, but not as broad as Intellect is bringing on the table.
Mr. Jain, just to deviate away a bit from this current platform launch of yours, because you are a big player in the US banking systems. Your platforms cater to all the large mid-cap US banks, and there is so much happening. There is a lot of uncertainty. 3 banks have collapsed. So first, wanted to understand, do you have exposure either to SVB in any form? Were they your clients who used your platforms, or Signature, Silvergate, the 3 banks which have collapsed? And then separately, if you could go on to tell us your exposure to regional US banks.
Okay, so US is not such a big number. We were entering to US, but we are entering US through the AI route, not from the core banking route. We still believe the fall of SVB, Silicon Valley Bank, is a asset liability management system. They didn't have a technology to invest in. India also have the same exposure. Indian banks are not invested in ALM systems. So they didn't have an early warning signal. If they would have ALM, they could have got the signal at 18 months before the collapse has happened, and they should have acted on it based on ALM. So we recommend great technology of ALM in India. We need to learn from them.
So no exposure, sir?
No exposure on all the 3 banks. No exposure
at all to any of the regional banks?
That's right. As of now, regional bank is there, Fifth Third Bank is there, which is very conservative. They are Midwest Bank. They are not looking into any of this investment. Their downfall is hardly compared to anybody else. They are solid balance sheet. So we have exposure to the BNY Mellon, but they are the solid banks. They don't have a exposure of Silicon Valley Bank or Signature Bank.
Can you just quantify that, just in terms of a percentage, your exposure to some of these mid-sized US banks as a percentage of, let's say, total business?
3 to 4% maybe.
Okay.
Okay, all right, got that. Mr. Jain, are you seeing any kind of impact with respect to deal deferrals, any kind of tech spend coming through from your clients at all? Because I know up until Q3 it was quite healthy, even clocked in around an 8% growth. But is there anything that you're seeing on that front now?
No, we are looking healthy growth right now. I think the banks are now, to manage the risk containment, they need a new set of technologies. The Wave 3 technology will not support them to manage the risk, because those are very lag indicator oriented technology. They need a lead indicator based technologies. Today with the AI, they can have a lead indication.
Just one more word, sir, since we have you. What do you think will be the ripple impact of the weakness that we are seeing in the banks on the Indian IT tech landscape?
You're looking at which kind of banks?
Sir, IT services. No, I'm saying generally, most of the banks is going to be sitting on huge bond losses. They will be capital constrained, which means their ability maybe to spend on tech may have come down. They would be cautious. And plus the regional banks themselves are under the scanner. So just wanted to understand, according to you, how will this impact? What are the implications from an Indian tech point of view, from an industry point of view, services and products?
I think services may have some impact because of digital project may look at it slowing down. But as of now, we are not seeing it. Even service companies whom I talk to them regularly, they are seeing that still traction is high. Maybe we'll observe for next 3 to 4 weeks more cautiously how this impact of US is going to be there. And it may be having some impact on somewhere. We cannot say that we can be fully insulated from the thing. But as of now, Intellect, I think we have a more capacity issue than constraint on the demand side.
Okay, we leave it at that. Mr. Jain, thank you very much for joining in, and all the very best with eMAC.ai. We'll chat more as in the subsequent weeks to understand how many of your customers have onboarded the platform and what the success and the benefit has been. Get into a break. On the other side, we'll talk more markets.
Hey guys, welcome back. You're still tuned into Trading Hour. The market is still under severe pressure, so over 100 points gone on the Nifty. The Sensex has lost over 300 points right now, and it is once more the Nifty Bank which is really leading the losses, with the PSU Bank Index down 2.5%. But with that, we do have to wind down on this edition of Trading Hour. Before we do that, here's a quick programming note for you. CNBC-TV18 will host what will be India's largest summit on gender parity in Delhi today. And women leaders from all walks of life will come together to brainstorm and ensure that we take decisive steps to bridge the gender inequality gap. The event starts at 4:30 p.m. and we will bring you live coverage right here on CNBC-TV18.